Hello, this is Lance Zimmerman and welcome to the CattleFax closing bell for Thursday, March 31st. It's been an exciting week for the beef industry. Let's discuss two items that shaped corn and cattle markets over the last 2 days. Today's first story, corn and the USDA quarterly grain stocks and prospective plantings reports. Corn futures contracts were limit up today in response to the much anticipated morning release of two USDA reports. The grain stocks report provided the bullish market sentiment, where the USDA reported corn stocks lower than expected. Industry analysts estimated corn stocks at 6.7 billion bushels. The report came in more than 6.5 billion bushels, 178 million bushels lower than expected. Based on this report, CattleFax projects to see a higher total usage number for U.S. corn in the April 8th World Agriculture Supply and Demand Estimates report. It's likely we'll see stock-to-use levels fall below the USDA's March projection of 5%. Anticipate an April stocks-to-use level of around 4.6%. This ranks as the second smallest stocks-to-use level in history, and it's also the reason all corn contracts were limit up today. The new crop corn acres in the prospective plantings report came in at 600,000 acres, higher than the trade estimates. The 92.2 million acres dedicated to corn production will have limited impact on the market's near term, considering the production risk between now and harvest. In addition to corn acreage being lower or higher, wheat acreage was up 8% from 2010 and soybean acreage was 1% lower. Our second headline, record-setting prices in yesterday's fed cattle cash market. Tighter supplies provide feedlots in eastern Nebraska and Iowa with additional leverage. Cattle in that region sold at $200 in the beef, which is around $10 to $14 higher than last week. Prices advanced on the average $7 for feedlots in the southern plains, and cash prices ranged anywhere from $120 to $123 live. This week's record-high cattle prices will force end users to evaluate procurement and pricing strategies again next week. Look for packers to continue pricing beef significantly higher in hopes of maintaining a positive margin. Slaughter levels may be reduced next week if meat buyers resist higher asking prices. Feedlots will likely be pricing cattle higher next week as well. Cattle feeders sense they have leverage in the marketplace. Also, with the strong relative basis to April futures, feedlots will likely offer more cattle for sale. The corn market locked limit up today, and overall, grain markets finished today sharply higher. Record high cattle and energy prices tested their annual highs for this week as well. These trends point to continued volatility in the cattle market next week. Thanks for watching, and be sure to visit CattleFax.com for the latest market news and analysis.